Okay, dear students, in today's class, you are going to learn something about the statement of affairs, which is prepared under single entry system of bookkeeping. You are studying the conversion of a single entry system of bookkeeping into double entry system of bookkeeping. That is why it is necessary for you to understand what is a statement of affairs. You know that under double entry system of bookkeeping, we prepare a statement of assets and liabilities, which is called as the balance sheet at the end of the accounting year. In the similar way, under single entry system also, a statement is prepared by the businessman, uh, but he doesn't follow the rules and the regulations of the double entry system of bookkeeping. But this statement is called as statement of affairs. Therefore, we can say that the statement of assets and liabilities, which is prepared under single entry system of bookkeeping, is called as statement of affairs. See what is recorded in this statement. As I told you, here assets and liabilities are recorded. Liabilities are shown on the left hand side of this statement, and all the assets are shown on the right hand side of this statement. See, it just looks like the balance sheet, but this is not balance sheet. Why this is not called as a balance sheet? There are so many reasons are there. I can tell you that while recording each and every business transaction, for the preparation of balance sheet, we need to follow the rules of debit and credit, and each and every transaction must be brought into account. But here, in case of single entry system of bookkeeping, all the accounts are not maintained and all the transactions are not what you call recorded. Because of that reason, we get incomplete information. With the incomplete information, we can't what you call prepare the balance sheet. That is why here, under single entry system of bookkeeping, instead of what you call uh, balance sheet, they prepare what? A statement of affairs. Here, why statement of affairs is not called as a balance sheet? Why we can't call this one as a balance sheet? I will explain by taking some of the examples. You take here the assets. I write here building. I will show rupees 5 lakh here. 5 lakh. The value of the building is rupees 5 lakh shown in the statement of affairs. If the same building is shown in the balance sheet, the figure which is shown is the true figure, that is the correct figure, which is calculated by following the principles of valuation. See, balance sheet is prepared by taking the true figures, but whereas the statement of affairs under single entry system is prepared by taking the figures based on the personal estimation of the proprietor. See, if rupees 5 lakh is to be recorded here, the businessman or the sole proprietor, he will not call the experts to make the valuation of that building. But this is not the case with the balance sheet. When we prepare the balance sheet, whatever the amount is shown of that particular asset, for example, land and building is shown rupees 10 lakhs, but that 10 lakh is shown after getting the, valuation done by the experts. Here experts will be called and they will make the valuation of the building, and the depreciation, if necessary, the depreciation is also calculated and deducted. Then the true picture will be shown in the balance sheet. But here in the statement of affairs, the businessman, he records on the basis of his guesswork or the personal estimation. Because of that reason, we can say that this is not reliable in nature, because the businessman show instead of rupees 5 lakhs, he can also show rupees 10 lakhs, but there is no proof for the value of this building. But this is not the case with the balance sheet. In the balance sheet, the record of the building will be there, then the proper valuation will be made with the help of experts advice. The calculation will be done and that will be shown in the balance sheet. That is why we say that the balance sheet will give the true financial position of the business, will what you call give the picture of a true financial position of the business. But whereas the statement of affairs do not depict the clear financial position of the business. You take for example machinery is there. I will take one more example. Machinery, rupees 2 lakhs is shown. The value of machinery is rupees 2 lakhs. Here, this amount is shown by the businessman based on his, personal estimation. He will guess and he will write the amount here, rupees 2 lakhs. But this is not the case with the balance sheet. Then here one thing I would like to tell you that under double entry system of bookkeeping, before going to show the value of current asset or fixed assets, there certain principles are required to be followed. See, what is the principle while making the valuation of fixed assets? There we calculate the cost price of each and every asset. Then from that we deduct depreciation. After deducting depreciation, whatever amount remains, that is the written down value, that we will show in the balance sheet. That is called as the true value of that particular asset on that particular date. Therefore, here balance sheet presents the true picture. But in case of statement of affairs, this is shown by the proprietor himself. That is why this is not reliable in nature. Even in case of current assets, you take for example stock. I am taking here stock rupees 50,000 is shown by the proprietor under single entry system of bookkeeping. But in case of double entry system of bookkeeping, there we need to follow the principle of valuation. The current assets are valued by following the principle. What is the principle there? Cost price or market price, whichever is less is to be taken as the value of current assets. By following this principle of valuation, current assets are shown in the balance sheet. But here, in case of a statement of affairs, the stock which is shown, that is rupees 50,000, is not the accurate figure. The sole proprietor may manipulate this one. The sole proprietor may show rupees 80,000 or more than that also. That is why here this information is not reliable in nature. But here this statement of affairs under the conversion of single entry into double entry we prepare in order to calculate either opening capital or the closing capital. Here two statements we generally prepare. One is the opening statement of affairs. Next one is closing statement of affairs. Opening statement of affairs is prepared by taking the opening values which are given in the problem, and we find out the difference. That difference is called as opening capital. For calculating the opening capital, we prepare opening statement of affairs. Then one more statement we prepare, that is called closing statement of affairs. As the name itself indicates, here the closing figures which are given in the problem are to be taken while preparing the closing statement of affairs. And whatever the differencing figure we get after the preparation of closing statement of affairs, that is called as closing capital. That is why in brief you have to remember, statement of affairs is nothing but a statement which is prepared by the sole proprietor or the businessman who is maintaining his business records under single entry system of bookkeeping. And the main purpose of preparing this statement of affairs is to calculate the opening capital or closing capital of the business. Next one is, see what are the differences between statement of affairs and this one balance sheet. Just we can write number one, statement of affairs is prepared under single entry system of bookkeeping, whereas under double entry system of bookkeeping balance sheet is prepared. Next one is here under single entry system of bookkeeping, the statement which is prepared includes the estimated figures. Here this estimation is made by the proprietor himself. That is why estimated values can be seen in the statement of affairs. These values are not the true values. But whereas in case of balance sheet, all the assets and the liabilities are recorded by making the proper valuation by following the principles of valuation. Therefore, the records, the entries which are made in the balance sheet are not based on the personal estimation. That is why the balance sheet depicts the clear financial position of the business. Therefore, a question of the estimation doesn't arise there. But even if the what you call the valuation is made, the expert's advice will be taken, because here under double entry system of bookkeeping, even the balance sheet or all the books of accounts are to be audited by the expert auditor. Because of that reason, all the entries are recorded in a systematic manner, so that there should not be a scope for what you call the misappropriation or misrepresentation. That is why the true picture is required to be shown in the books of accounts. See, when the statement of affairs is prepared by taking the estimated figures, now the information which is given by the statement of affairs is not reliable. Suppose the businessman wants to take the loan. In that case, if he presents this type of records to the what you call the bankers will not accept this one as reliable, because this statement is prepared by the proprietor himself. Therefore, banker may not take this one as reliable what you call document. But when the trading account, profit and loss account, and the balance sheet audited records, final accounts are presented to the banker, then banker will accept that one as the valid documents. He relies on that. Therefore, whatever the information is given by the statement of affairs is not reliable in nature, but the balance sheet, whatever the balance sheet gives the information, that is reliable in nature. That is why here the creditors won't accept this one as reliable. Next one is the financial position of the business is known after preparing this type of statements. Even balance sheet is also a statement, but that balance sheet gives the true picture of the business. Therefore, true financial position of the business can be known by preparing the balance sheet. But here, the statement of affairs, it doesn't what you call give the clear-cut financial position of the business. Because of that reason, this is called unscientific, and the balance sheet which we prepare under double entry system of bookkeeping is called as scientific statement. Next one is here the statement of affairs is not generally audited, because see, in case of small business undertakings, audit is not compulsory. Small business undertakings may not go for appointing the auditors, but whereas in case of companies or large scale business undertakings where the public money is what you call invested, that is in the form of shares, debentures, etc., here the amount which is collected from the public is required to be utilized by the business undertaking productively and efficiently, and there should not be a scope for misappropriation of such type of amount. Because of that reason, as per the Companies Act, it is compulsory to get the books of accounts of a company audited by a qualified auditor. Here qualified auditor is required to be appointed, and that auditor is going to check each and every transaction from the beginning, from the day book up to the final accounts. He will verify each and everything. Then after that, he will sign the important documents, that is trading account, profit and loss account, and the balance sheet. Therefore, here the true information or the information which is presented in the final accounts will easily be accepted by the outsiders. But here the information which is portrayed by the statement of affairs is not reliable, and it is not accepted by the outsiders. Therefore, dear students, here one thing what you need to remember is, because of this type of problems, what the businessman does, here the businessman who is maintaining or following the single entry system of bookkeeping may think of converting his what you call books of accounts under double entry system of bookkeeping. For conversion of single entry system into double entry system, what we need to do is we have to prepare what first statement of affairs are required to be prepared, and after that we have to find out the missing figures by preparing the total debtors account, total creditors account, bills receivable account, bills payable account, like that. Whatever the information is available, with the help of that information we have to find out the missing figures. Then with that, easily we can convert the single entry system records into double entry system records. Because of that reason, here conversion is required. Okay, in the next class, I am going to explain how the total debtors accounts and total creditors accounts and bills receivable, bills payable, how these accounts are prepared, and what is the main objective of preparing such type of accounts, and what are the items to be recorded. That aspect I am going to explain in my next video. Okay.